When you get a letter like this from the IRS saying that you owe a bunch more in tax that comes as a total surprise to you, don't immediately pay it without understanding where the number's coming from. Don't let the fear push you into a knee-jerk reaction of handing over your wallet. In my experience with this particular type of letter, the tax they say you owe is almost never what you actually owe. You might not feel like you have all of your ducks in a row, but remember, the IRS doesn't have its ducks in a row either. And you're probably in better shape than you give yourself credit for. I want to talk to you about the most common reason I see why resellers and online business owners get letters from the IRS, and the simple solution that'll make the issue and much of the tax go away. Hey, my name is Mark Tu, and I'm a CPA and former six-figure online seller who specializes in helping resellers and online businesses with taxes and with growing their businesses profitably. The fact that you get a 1099-K doesn't change what you have to report on your tax return. The main thing it implies is that the IRS will now have an idea of what you're making online, and if you don't report that income, you'll likely get a letter from them assessing additional tax. It might not be this year or even next year, but they will probably eventually get around to it. So you might as well just save yourself the panic and trouble and make sure you're reporting all your business activity on your taxes. All right, so it's tutorial time. So just picture this. You're going about your day, minding your own business, and you get a letter, you open it up, and you see this proposed amount due $8,363 from the IRS. And you start freaking out. You're like, what the heck? I filed my tax return and it showed I got a $500 refund, but now you're saying I owe $8,363. So here's where a lot of people just sort of freeze and panic and maybe just put it away and forget about it or just keep worrying about it. But what you should do is talk to whoever helped you prepare your taxes, or if you prepared your taxes, maybe give someone a copy and they can look at it with you, which is what I do a lot of the time, or just go through the letter and see what they're saying. So if you look a little closer, you can see the tax you owe is $6,439, but then they're adding this penalty of $1,288 and interest of $636. Those are both calculated from this additional $6,000 number that they say you owe. Okay, so how are they getting that number? So let's go to the subsequent pages and see what they're saying. So if you look at this page 3, and this is for a few years ago. So the IRS, they can go back a couple years. I mean, you might get a letter for a tax year that's already a few years in the past. So they show this line, payment card and third-party network transactions. As corrected by the IRS, $29,776. What you reported on your return, it's a little bit blurry, was $0. So that is the main difference. And then on the next line, self-employment tax deduction, because this is from self-employed income, at least according to their records, they say, okay, you now get this deduction of $2,104. That's how they get this change to taxable income of $27,672. So before on your original tax return, your line 15 showed $95,24. So line 15 is your taxable income. And they basically combine that with this $27,672 to get an adjusted taxable income of $18,148. The income tax on that they calculate is $1970 plus self-employment tax equals $6,177. And then based on your adjusted income, they're saying that disqualifies you from the earned income credit that you had before. And then the income tax withheld that you reported on your return matched what they had, so there's no difference there. So this is your main difference, the 6439. And if you go back to the first page, that's the 6439, and they're saying, oh, and since it's so late, you owe this $1,288 and $636. So there's still more information. I mean, I've seen this happen so many times. I know what's going on, but you can go down further on the page, and it shows you a detail of that $29,776 that they're reporting. Who was it received from? Oh, look at this, eBay. Got eBay's address, account information, Form 1099-K. We've heard that one before. So remember, when eBay issues you a Form 1099-K, they're also reporting that information to the IRS. That's how the IRS got this information. And they're saying, hey, eBay, they're the others, they reported $29,776. And that's what they're expecting to see on your Schedule C. But this person didn't report it on their Schedule C. They didn't even include a Schedule C. That's why here above it shows 0. You showed 0 on your return. The IRS is expecting to see almost $30,000. So the dumb thing is that they're saying, well, we're just going to tax you on that full $30,000, minus this self-employment tax deduction that you get. But guess what? They are not accounting for your cost of goods sold, your refunds, your shipping, your eBay fees, your mileage, your home office deduction. So this person recently sent me an email and they're like, oh my gosh, do I really owe $8,000? And I said, probably not. That's probably all gonna go away, or most of it's gonna go away when we write the IRS back and include all of our deductions. So how do you make this amount go away? Let me show you. Okay, don't be scared. This is what the original tax return looked like. So just a little bit of W-2 income, $3,400. You skip down to the standard deduction. So that basically totally erases or wipes out, reduces the income. So it gets your taxable income down to zero. So tax is zero. There was $241 withheld from the W-2. And then based on that amount in the tax tables, this person was eligible for $262 of earned income credit. So the taxes withheld plus the earned income credit equals $503. But since there was no tax due, you get all of that back in the form of a refund. So $503. So that's the original tax return. Let's look at the Schedule C that we're going to fill in with all the deductions, and we're going to send that back to the IRS as part of an amended tax return, and that should reduce the additional tax that the IRS says this person owes. So here's the Schedule C. So what we want to do is show the 1099K amount right here on line 1. So the IRS computers are looking for that. And if they see a number that's less than that, it's going to throw up a red flag. The interesting thing is that 1099Ks are typically inflated numbers. They include sometimes your sales tax. They don't back out any refunds that were issued. So this number is going to be inflated, but we still want to put it here on line 1 because that's what's going to satisfy the IRS computers. So we have here the 29776 on line 1. So this is part of the amended tax return that we are sort of reviewing, preparing together. So let's say your actual sales were only 28,000. We want to make sure that we record the difference somewhere, either here on line 2 as returns and allowances, or we can bury it here in the other expenses line. So let's just assume that we're doing that, or that's a part of this refunds number. So then we've also got to include our cost of goods sold. In this case, it's this 15,000. We've got our mileage right here, 3460. So that's just based on the mileage rate for that year and how many business miles you incurred. We're including our supplies. We're including any business related taxes. We've got some travel. Got the business portion of cell phone and internet. I typically put that on this utilities line. And then we've got other expenses of 6360. So that's broken out down below on page 2. And that's your shipping, any subscriptions, eBay fees, software, anything that doesn't fit in these categories. And we've got the home office deduction here on line 30. So that takes us down to zero. So there's actually more home office deduction available for this taxpayer, but you can't use it when you have a loss. So the remainder is going to carry forward to the next year. So it gets us down to a profit of zero. So the interesting thing is, because the business has a profit of zero, the amended tax return is going to look like it's not changing at all. And the main form the IRS looks at is the 1040X. So it's the amended individual income tax return. If you look at how they have it set up, you have the original amount in column A, and you have the correct amount in column C, and then any changes are in line B. So if we didn't have enough deductions to wipe out all the income, let's say our net income ended up being like $5,000 of taxable income, that $5,000 would be in this section right here, and then it would be added to the total income, a new tax would be calculated, and then we would say, okay, the tax should have been $1,000, but we gave you a $500 refund, so you owe us that $1,000 plus the refund that we paid you, so you're going to owe us about $1,500. But in this case, we're saying that there's no additional tax, so the refund amount is going to be zero, and the amount that you owe is going to be zero. But when we submit this tax return or e-file it or whatever, it's going to be filed with this Schedule C, and the IRS computer is going to see that there was actually a $29,776 amount that was reported, but it's also going to record the deductions and see that the net income was zero. So there's going to be no change. The only change is going to be that the issue goes away. So there you go. Do an amended return and include all of the deductions you're eligible for and see how it changes your original tax due. Most of the time you'll owe less than what the IRS is showing. Sometimes you won't owe anything at all. And sometimes it'll even mean an additional refund for you. If you need any help with this, just let me know by using the links below, where you can also find more resources to help you optimize your tax situation and overcome the anxiety so you can focus on building your business profitably.